It is indeed a historic meeting. Lots of interesting pictures going out there. I think the most for me was actually the handshake. Like, I never thought that would happen. But what's your biggest takeaway really from the meeting that's taking place?
Well, it's very important to understand that, when you have a dog in the manger surrounding three very powerful global economies, that is China, Japan, and South Korea, it's very important to manage this gentleman because he sits in a very critical and strategic sector of the global economy. Three economic superpowers and their impact on global trade and the global economy. And I think the dialogue is always very important, and I think to know that there is dialogue gives a lot of people peace in terms of nuclear disarmament and things like that. So that managing that whole process, I think, gives everybody else a lot of comfort in the sense that a lot of economies globally are exporting or importing either from China, South Korea, and Japan. Those three countries contribute significantly to global trade. Well,
I would say, for me, I really want to be excited about the whole process, but I'm saying to myself, should I be at this point? Because it's really unclear, really, if Kim Jong Un will really agree to a denuclearization and the process, of course, for verification, what he is going to agree to. I think fingers are really crossed on this because I hear from what happened at the meeting, just had both presidents and the interpreters in the closed door a meeting. What do you hope will really come out of this at the end of the day?
Well, I think what has come out of this is a signed agreement, and I think it's very important for anything that you're doing. And once you've had a signed agreement and there's been a meeting, what you do is you douse the tensions. So there are many experts. I think we've seen, unfortunately, Trump pulled out of the nuclear deal with Iran, which was put with trade. But these transactions take a very long time to be able to facilitate. And as you've seen, there are a lot of skilled diplomats and negotiators who can actually work with the process of getting things done. And the most critical people, again, will be the Chinese, the South Koreans especially, and the Japanese, who will play a critical part in helping him make sure that the terms of these agreements are seen through. And of course, there's also the sort of the carrot and stick approach in terms of what sort of carrots are you going to offer him and incentives for him to go through this whole process. So it's a very good start, and I think it diffuses all the tension. And I think the optimism in the world will lift global markets and, of course, also global trade.
So we can actually just hope for the best. I know, of course, as a build-up to this particular meeting, we saw the US dollar strengthening against its Asian counterparts. But in terms of impact, what impact do you see this happening, having rather on a continent as Africa?
Well, we're part of the global trade, and we also trade with, as I said earlier, it's a question of uncertainty with trade around China, Korea, and Japan. And those are big trading partners also for the African continent. And of course, it's important that we know that region is also stable because it also helps and impacts on our economy also.
Well, since we actually just sit on one side, actually hope for peace, that, transactions are already ongoing, keep running smoothly. I think this actually just also puts a spotlight on trade on the African continent itself. And what we're actually doing to strengthen trade ties, amongst the countries here on the continent. Nigeria, for one, was not a signatory to the CFTA to begin with. But let's talk about this really and the impact this is going to have going forward. I understand that the South Chambers of Commerce and Mines and Agri actually asked the federal government to sign, talking about the fact that it will increase our economic growth by $2.9 billion. Not sure how they came around to that estimate. But let's talk about, the advantage and disadvantage, really, of not being part of the first phase.
First of all, let's look at this from a historical perspective. African exports are about $120 billion a year, and imports probably about $160 billion. Out of this, less than 20%, about 18%, is only intra-Africa trade. So if you compare that to Asia, that has about 60%, 50%, about 60%. Asia has 60% in inter-Asia trade, and in the EU is close to about 70%. So we're very, very low on that scale in terms of intercontinental trade. Now, this is not surprising because most of the African countries were export enclaves of colonial territories. And most of the African exports are mostly from extractive industries, oil and gas, cocoa, and all the sort of areas. There's very little value-added processing. And that is where the challenge is, because we don't have a very strong manufacturing base on the African continent. So this is where we have the challenge. And in Nigeria, for instance, the largest economy in Africa should actually take the lead. Now, one of the things that we noticed when we came in was the fact that Nestle shares have gone up significantly. Nestle has a strong manufacturing capacity in Nigeria. The Nestle plant in Flowergate in Ogun State, which is about 50 kilometers just north of Lagos, has capacity to produce not only for Nigeria, but also for Africa and also globally. So that Flowergate manufacturing plant for Nestle is not only a Nigerian support plant, but it's also a sub-regional and an African and a global export base. So we as Nigerians have to understand that in order for us to sustain our lead in Africa, we need to take a lead with these sort of agreements and understand that we need to give incentives to companies that have manufactured successfully here and to encourage more companies to come in here to use our large market as a base to be able to export not only to the ECOWAS sub-region, but now you're looking at a bigger market in terms of the African sub-region. So, and I think that is something that we have not really got around our heads. But right now I think there's a sensitization being done, and they've been going around the country to be able to sensitize people about the benefits of all this and to see how it's going to work. But I think the fear will come from the fact that Nigeria refused to sign the trade deal with the EU. So a lot of people are fearing that the reason why this is coming up is that the EU might now use this as a backdoor to go and sign an agreement that will affect us adversely with the continental. But if Nigeria is not on the table, we can't block the EU.
But there's something really key you mentioned, of course, issue of low industrialization. A lot has been said about Nigeria signing or not signing the CFTA. What I keep asking is, how prepared are we really? We're talking about the fact that this is actually going to, establish some form of continental customs, call it customs union to begin with. How much of interaction do we do in terms of course, on the institutional level? We also have AGOA. How much do we even benefit from AGOA to begin with? Which you talked about, of course, we highlighted when you said issue of low manufacturing, low industrialization must be tackled. Before we begin to talk about who has signed or who hasn't signed, do we really have what it takes? You just mentioned Nestle. Well, that's just one out of, this is the African continent. Do we really have what it takes? Do we really have, what we're going to exchange?
We do. I mean, the trade, as I said earlier, the trade figures are there. We're exporting 120 billion on the continent, and we're importing about 160. We're
exporting 120 billion of raw materials or value-added products.
The value of our exports on the continent is 120 billion. The value of our imports is 160. So that's a high degree of trade. But what we're saying is that of that export and import, less than 20%, about 18%, is done within Africa. The rest of our trade is going offshore. But like I said, in Asia, the value is about 60%, and within the EU is as high as 70%. So what we're doing is that we're not trading enough within the continent. We're trading mostly outside the continent, and that's what we really need to address. So Nigeria, for instance, has a competitive advantage in petroleum products. So why is Nigeria not exporting petroleum and products to all African countries?
Well, it's clearly important to begin with.
Yeah. Clearly now, because you don't have refineries, you don't have the petrochemical industry, it's all gone down. You now don't have the capacity to be able to be the leader in petrochemical products for the continent. So if we had the capacity, probably 80% of our exports of crude and petroleum products would be consumed on the continent.
So just